Happy Easter, everyone. Now, today, instead of hunting for Easter eggs, I'm just hunting for different stocks to look into and maybe set some price targets for. So, SoFi Technologies is one that was recommended to me by a friend of mine who himself had been doing some puts on this stock not too terribly long ago. Now, my price target for this is going to be based on a few different factors, okay? One is the fact that this is basically a bank. Now, there is a technology component, and it may deserve some credit for that, but fundamentally, it is basically a bank. The majority of their business is, loans, okay? Now, one thing to keep in mind is that their student loan refinancing business is pretty substantial, and as some of you might know, there's been these pauses on student loan payments. Now, that has hurt this segment of SoFi's business and may have been one of the things holding them back, actually, from achieving net profitability. So, with regards to how the market's pricing them currently, to me, it appears that it's basically just pricing them about at book, okay? Their equity on their balance sheet is about $5.2 billion, okay? Market cap about $5.37 billion. So basically very close to just a one-to-one valuation there. Now, strict value investors would say, hey, you need to also discount the value by the goodwill and the intangible assets to get the tangible book value, and that would be the metric you would want to go by. Understandable, but this is still, getting that tech startup type, I think, type credit to a certain degree in the market, though not as much as it used to. Okay, at one point in time, or multiple points in time, actually, this was actually a $20+ stock, okay? And interestingly enough, the shares outstanding were actually less back in those days than today, okay? So there has been dilution in this company for shareholders who have been around for a long time. Now, I think that to an extent, when the stock was that far overpriced, that was probably the smarter business move for funding their operations and their growth, more so than taking on massive amounts of debt that they would have to repay back, and be charged interest and all of that, when they could just, hey, let's just issue a bunch of shares and do it that way. Now, that is just something that you want to keep in mind, though, because while their revenue is going up, okay, their net income is getting closer to break even. They're only losing a nickel per share as of their last release. I do think it's just important to keep in mind that this company still loses money, still potentially dilutes, and so even if you say, hey, because of the technology component, maybe you don't discount their intangibles and goodwill, you still, I think, would want a discount to the face book value here. Myself personally, I look at it and I say, hey, if we have another pullback like what we had, back here in November, December, I would think about selling puts somewhere in the 450 range. That gets me a nice discount off of book value. It gives me a little bit of wiggle room for the fact that there's a good chance they're going to be diluting. So if that book value has to be split amongst more partners, I'm not losing quite so much. And hey, if EPS and everything goes positive, I think that that would leave plenty of upside, right? So personally, I think I would be selling puts somewhere in the 450 range in the event of a pullback. I don't think I'm a buyer at the current price. And that may seem like a little bit nitpicky or something, but I think everybody who invests has to take valuation into consideration and choose a price that makes sense for you and your objectives. I also would never have more than maybe at most like 1% tied up into something like this. Now, hey, on the outside, if it's like a 10 bagger, I'm okay with 1% of my portfolio being a 10 bagger, okay? That's awesome. All right? But in the event it kind of languishes a little bit, I'm not putting that much on the line in order to potentially get the benefit of owning something like this. Now, I do think that if the student loan repayment pauses come to an end, and they're able to, they're able to get to break even or net profitability before their $1.4 billion of cash gets too depleted, they may not actually need to dilute anymore. I'm just taking the history of dilution into consideration and saying, hey, they aren't profitable yet. Push come to shove, are they going to issue shares? Probably, okay, because that's what they've done before. That's their track record, okay? It would be dumb not to take their track record into account. So when it comes to SoFi, personally, I'm saying somewhere under $5 per share, all things current with the company considered, and most likely it would be just selling puts around the 450 range, collecting premium, and if I got to sign some shares, I got to sign some shares. Wouldn't take a huge position in it, but it seems like it's got growth. It's pretty popular with younger people, and it's definitely got some potential. That's just my view on SoFi Technologies. Let me know what you think in the comments below. Do you own SoFi? Are you looking at it? Is it on your watch list? What's your price target? Let me know in the comments below. Like it if you liked it, and make sure you subscribe to the channel, and I'll cover more stocks in the near future. Take it easy.